Hey, welcome back. Today is April 12th, Monday, and on this post, I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, and see how they could potentially affect the overall altcoin markets. Before diving into Ankr token, Ankr USD, and see what is going on in here. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market, according to what I'm seeing on the charts. Before I begin today, if you guys are enjoying this content, make sure to subscribe to the channel and like this video, as I'll be keeping updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks as of today upon a successful sign up and a qualifying deposit of $100 US, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I am purely sharing my own speculation and opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you have any questions or comments, please do only leave them in the comment section below, but I'll try my best to get to as many of them as possible. Let's see what's going on in this market first. Most importantly, I do take a look into Bitcoin dominance. Tells me what the money could be trending into. Would it be Bitcoin, altcoins, or neither? Today we have Bitcoin dominance down almost 0.8%. This breaks down to Bitcoin price action, almost a very slight change today, down 0.05%. Total altcoin market cap not affected today by that slight pullback, not even a pullback in Bitcoin really, but total altcoin market cap up over 1.7%. Now, this is the upside of Bitcoin dominance trending downwards still, because total altcoin market cap is leading the gains ahead of Bitcoin. I usually emphasize Bitcoin dominance to trend downwards. That's generally speaking better for the altcoins on both the upside and downside, because conversely speaking, if Bitcoin dominance was actually trending upwards, the upside of that would be Bitcoin leading in gains ahead of total altcoin market cap. On the weekly time frame here for Bitcoin dominance is still we're still in a falling wedge pattern, which is generally a bullish pattern. If Bitcoin dominance actually breaks to the upside of this pattern, that's not as ideal for the altcoins. Let's go to Bitcoin here. As I've been saying, there has been bearish divergence playing out on here. The safer signal I am looking for here to tell me bearish divergence is done playing out will be seeing a higher high on the price action chart, along with a higher high on the RSI. The last high RSI reading I'm looking to beat is about 75 here from this little top right here. Let's go over to monthly time frame, where we have been having bearish divergence for quite some time, and we are in overbought territory as well. Not something I'll lose track of, even though it does not look like it's playing out still. Okay, however, do take a look into Bitcoin history here on the monthly time frame, where we did get into very overbought territory. Okay. And one data point on here is still 1 month's worth of time, just as a reminder. If Bitcoin pulls back at any time, it could still have a bearish effect on the altcoins. That bearish effect would be greater if Bitcoin dominance is trending higher. It's just that today, right now, Bitcoin's pulling back just a very little bit. Still an uncommon case that has not had any bearish effect on the total altcoin market cap today, and as we have seen yesterday. Let's take a look into Ankr token and see where we are at from the monthly time frame down to the daily, and see if we have any overbought RSI readings or possible bearish divergence scenarios to be looking out for. Monthly time frame here, we're currently about just right under 95 here, so that's 95 out of 100, so that's very overbought, okay, on this monthly time frame. Weekly, we are at 85, 86 here, almost 86 out of 100 here. Price action, if the price action was to make a higher high here, it does need to beat the last RSI reading of about 97, almost 97 here to negate bearish divergence. 3-day time frame here, we're currently at about 84. Very similar thing could be said here about negating bearish divergence. if the price action was to make a higher high on this time frame, very similar thing as what I said on the weekly time frame. Daily, we're currently at about just right underneath 61 here. Very similar thing could be said about negating bearish divergence as well if the price action was to make a higher high here. I'm looking at this high right here from the RSI to negate bearish divergence. Let's do a recap and see what has happened since last time. Since last time, I did point out a falling wedge pattern. Falling wedge patterns are generally bullish patterns. According to Thomas Bukowski and his website, it is a 68% chance of a breaking to the upside. Price action broke to the upside. Measure target adjusted for this breakout point would be about 21 cents, slightly under 21 cents here. Price action has been supported by this daily 21 MA, the blue line. Let's take a look into what I could be dealing with here. Let's switch over to a 12-hour time frame where I can get a clearer view. Okay. On the 12-hour time frame here, I do see a possible inverse head and shoulders pattern that is developing. Okay. And this is still an early estimate because we don't have that third touch to this neckline of this inverse head and shoulders pattern. Right now, I only do have two here. Okay. So I'm looking for that third one to actually validate this inverse head and shoulders pattern on this 12-hour time frame. And I just want to note that this right shoulder here is slightly lower than the previous two shoulders on the left side, and I think that's still okay. Okay. Because of not too much of a difference, and I do still think it could still validate an inverse head and shoulders pattern based on this general shape right here. Now, the neckline, as I said, is 20 cents. That will be psychological resistance, okay? And I can actually get a candle across two candles at least right now at around that the vicinity of 20 cents, okay? So, but I would still say the psychological resistance will still be 20 cents. Measure target, which is taken by measuring from the neckline to the bottom of the pattern here. And then adding it back on top of the expected neckline here, okay, which will give me about 28 cents measure target, slightly above 28 cents measure target here. Now, measure targets are theoretical approximate targets only, may actually be different in real life price action more or less. And that's given that this inverse head and shoulders pattern is validated with that third touch to my estimated neckline there at about 20 cents psychological resistance. Let's take a look into the key supports and resistances relevant to this price action right now. Key resistance, first of all, would be the 20 cents. Let me take into consideration of the resistance that's underneath 20 cents as well. So as I have mentioned last time, I would expect quite a bit of dense resistance coming from this group of wicks right here, indicating past trading history and resistance, okay? So from about slightly under 17 cents to 20 cents, there's quite a bit of dense resistance coming from past trading history here. After that, 22 cents, okay? Since we don't have any past trading history above 22 cents, I can only make a guess from psychological resistances where traders are likely to take profits at whole numbers. So at 10% increments after 20 cents, so 22 cents, 24 cents, 26 cents, and 28 cents. Those are my guesses of where traders are likely to take profits since we don't have past trading history beyond 22 cents right now. Now, key resistance, key support, 15 cents, fib level area, daily 21 MA, the blue line. Next up, about the 12.5 cents fib level area. Let's take a look into the bullish and bearish case scenarios. Bullish case scenario, price action finishes validating this inverse head and shoulders pattern with that third touch to the upper trend line here, the neckline here, which is about 20 cents. Breaks above it and go towards its measured target. Also mining some possible resistances along the way, which I have guessed to be psychological resistances. Okay. Now, also want to say one more thing. Even though it seems like we have a short-term bullish pattern here, I would not lose track of that monthly very high RSI reading there, okay, as that could pull back. And 1 month worth of one data point pulling back there is 1 month's worth of time. Okay. Now, that's the bullish case scenario. Bearish case scenario. The level I am eyeing at would be about this 14.5 cents level, because this right shoulder here is already lower than the left side here. So if we get any lower than this, I do not think that would look right for an inverse head and shoulders pattern, and that we could be looking at another pattern that's up for reevaluation instead. So not getting 12-hour candle closes below this 14.5 cents support here. If we actually do, I do think that this inverse head and shoulders pattern needs to be invalidated. And then the next level of key support I'll be looking at would be about the 12.5 cents fib level area here, and seeing if that holds. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know your agreements, disagreements, feedback. I'd love to hear them. Hope you manage your risk carefully, and if you'd like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.